This meeting is being recorded.
When you look at news, usually market price in the news that is likely to come. Even before it comes, you will see the structure there clearly, getting ready for that news to come. You know, that is usually the case when you are studying fundamental and technical together. But of course, you see, this one has already gone to break this top when the news has not come. So if the news come and the news even favors DXY going up, you will see that's when you see this one will first come down before going up again. You see it will first come down before going up. So that's just how some of these technical play out, preparatory for the to news release. But whatever be the case, actually I expect, I also have the feeling that DXY should come down, because if you look at other major peer, you can see that we have been expecting correction to at least this level, okay? Correction to at least this level before the fall. But what happened since Monday? Market has remained down, okay? Market has remained in consolidation since Monday. And this consolidation is not just an ordinary consolidation. It's a consolidation that looks like an ending structure, all right? When you have a push and you have consolidation around this level, this is an ending structure. And this structure is to break to the upside, okay? So if we're expecting DXY to, in a way, come down, then these major pairs are also getting a setup, you know, for a break to the upside to at least complete this corrective structure before we have another leg lower, because in the higher time frame, the trend is bearish. Just the same thing applicable. You see all of them. Can you see? Can you see all of them having an ending structure? This is what is called an ending structure. Look at the impulse, look at the correction, look at the way it's going. It's an ending structure. You can even see the lower end of it consolidating heavily. So this is preparation for a move to the upside. We're expecting this to happen. And what we'll just look out for is to wait to see how far the break to the upside will happen. Okay, if we break to the upside very strongly, then we look for correction, okay, to get involved for more upside. Okay, at least this level here before yes.
I think, just my opinion, I think there will be violent moves tonight.
Yes, I'm not going to trade it. I'm not going to trade it. And I don't encourage anybody to trade the FOMC. We have to preserve our capital and wait. Let the news play out. Let the news play out. Let us see the direction clearly. And then we now prepare ourselves, you know, for the next move. It's always better that way than to want to, you know, force yourself to trade in news that you don't know what the outcome will be. You know, it's better to react to market move than to predict it. That's how I see it. If you want to predict the market, you fall into trouble many times. But you should allow the market to play and you then react. You can read the market better that way. So you can see NZD USD, the way it's preparing itself for a move to the upside. I tell you, if this market does not come up, selling further will be difficult. That's one thing I've noticed in this market. Okay, for it to sell more will be difficult at this level. For it to continue to sell, it's going to be difficult. So even if news come that favors, you know, strength in major pairs, this will be short-lived, because it will just go up, it will just go down a little and then upside again, because all these move that are not convincing must be cleared out. This is setting out liquidity, building up liquidity at the top. The market must break to the upside to clear those liquidity, take order from supply, and then move to the downside. That's how it should be. All right. The same thing is applicable to USD JPY, Euro USD rather, you know. Supposing we are not expecting FOMC, then from the present level, might be just be looking for long, okay? If you break down and then up again, you see this pattern I've showed you sometimes, that if you have consolidation right here and you are at the bottom of the chart in higher time frame like daily, weekly, and monthly, and you see this consolidation in 4 hours that break down to the low here, is if you break down to the low and immediately return from the low, return this way, what it has just succeeded in doing is to come to the low, take order from demand, okay? You see the block right here, take order from demand and immediately move up. So once you see impulse like that, know that the next corrective structure is unarguably your trade to the upside. This is non-negotiable. It plays out 99.9% of the time. All right, you see the structure at support, you see the consolidation, and after the consolidation, you see a massive breakdown of the consolidation to the downside, and immediately it massively, rally to the upside without waiting. Is a proof that true liquidity has been grabbed right here at the bottom. So the next correction of that impulse is your trade, to the upside. On a larger scale, this description I just gave to you, all right, is also what you see that is playing out here. Can you see here? You see how the market massively break up to the upside. You see it? You see this candle? This institutional candle, you see the way it breaks to the upside, and what do you see? Immediately it flows down to the downside. What did I tell you? The next correction is your trade to the downside, non-negotiable. Can you see? Boom, to the downside. That's how it is. All right, that's how it is. The same thing you are going to look out for here. You see right here, you see consolidation, but you notice that if you measure the impulse, if you measure the correction here, it doesn't even get close to 0.5% fib retracement, So what, and it's breaking down. So what does it tell you? There is no sell trade here. Breaking down here will be to take order for more upside. Okay, and this upside this time around will come to 50 to 61.8 before we sell. That's how this market operates. So that's it. But if it's ready to sell, you will see that this consolidation you have here is going to what? Break up to the upside to take order here and sell. Can you see? So this is how we study the market. But of course, if you look at DXY here, you see that absolutely nothing is happening. You can see anytime DXY is in this consolidation, I don't get serious in trading. I don't get serious. I just forget about it, because you can see this up. When DXY is making this down, all the major will make a small up. When it's making this up, all the major will make small down. When it's making this down, all the major will make small up. You cannot define market direction when DXY is in consolidation. And if you go and do your research and look at all other pairs that are not even related to a dollar, they also experience the same thing, because what defines the existence of liquidity in the market is dollar. It's dollar that controls the market. Somebody will argue that but dollars are not being spent in Europe, dollars are not being spent in China, in this. In terms of international settlement, it is dollar. In terms of reserve, most economies of the world have their reserve in USD. So whatever that happens to USD and the United States economy goes a long way to affecting those economy. That is why you see that fluctuation of DXY will affect both dollar and non-dollar related pairs. These are some of the reasons. And of course, you should also know that, commodities are priced in dollar in international markets. For instance, look at gold and silver. They are priced in USD. Gold, silver, all these commodities, they are priced in USD. Oil is not priced in euro. Okay, oil is priced in USD. Look at it here. It's priced in USD, US oil. So anything that happens, to dollars, affect them. Anything that affects them affects dollar. So that's how it is. And that is why I always, told some of my followers that DXY is the first indicator of market, is the first indicator of financial market. And what do you use it to establish? You use it to establish a volume. If there is volume in USD and you see that market will be moving here and there, when this massive move to the upside on USD or on DXY happened, go and check all the pairs. The one that set up for sell will sell aggressively. The one that set up for buy will buy aggressively. Go and do your research and find it. That is how I came to a conclusion that DXY is the first market indicator. And what does it indicate? Volume. So if that is the case, if you're able to wait for DXY to set up correctly before you trade, the tendency for you to make money is a 90 to 80 to 90% sure. Okay, because if you wait for DXY like this one, if you break this way and correct to the upside, when it's making this continuation, if you go to the pair you are trading, if you have a setup there that is a perfect buy or a perfect sell, when this aggressive sell-off in DXY is happening, your own pair too will also make a good move, a good push. Do you understand now? So that is just exactly how I use DXY, to get the time I will trade and the time I will not trade. Right now, I'm not doing anything, okay? Only yesterday, I have a couple of trades, and what I expected DXY to do, it didn't do it. And those trades messed me up, all right? I was expecting DXY to come down, as I told you in the weekly outlook, okay, before we see another leg higher. But instead of it to come down, what did it do? It took off. It took up to the upside, okay? And based on this downside, I projected AUD USD to make a move to the upside yesterday, okay? I wanted this to make a move to the upside from here to take all this liquidity at the top before we look for sell before FOMC. But what did it do? It just made a little upside, like maybe 15 pips or so. What did it do? It came down. Why did it come down? Because dollar becomes strengthened. And when dollar becomes strengthened, it becomes very practically impossible for AUD USD to strengthen too. Because once the quote currency is strengthening, the base currency will have to what? Will have to weaken. That was why this one now went into consolidation and took out my stop loss with I think 20 pips or 25 pips or so. Do you understand now? Another one that we took that didn't work well was Euro CHF. Okay, Euro CHF. Honestly, when you do top-down analysis for Euro CHF, you see that it's right at the bottom and trying to find a way, to the upside. But this particular candlestick was not read perfectly. Okay, that is why I don't want to consider any engulfing that the engulfing candles has a wick on top. I don't want to place too much respect on it, because if the bullish pressure is massive and a true one, there's not supposed to be an immediate rejection. That's how I see it. There's not supposed to be an immediate rejection. So why do we have a bullish buy pressure, and then all at a sudden we have sellers appear? This is where, as we'll have doubted, the existence of this particular pattern. All right, but I didn't take cognizance of it, and I was looking at it that correction is about to start here. Okay, so after this candle, I suppose that we should have a buy opportunity from this level. And truly, if you go to 4 hours time frame, you will see that there was actually a break of structure that gave a little confirmation that a move to the upside was almost like imminent. If you look at it this way, right at the bottom here, and I saw this, okay, I saw this, okay, this move right here that took out these stop losses is a grab of liquidity, okay, and this grab of liquidity should make this pair to push. This should be enough to make this pair to push to the upside. But then we also saw this internal break of structure, okay, while the market was coming down, okay, coming down. You saw this break of structure. So we wanted to get in right here at 50 to 61.8 to the upside, because to us, we already grabbed liquidity here. So the market has no business coming down. That was how the market was read yesterday. But on getting to this level at 50 to 61.8 right here, guys, okay, putting our stop loss just below 78. We wanted to catch this move to the upside. But unfortunately, market took us out. It's not to be. And after we're taken out, we now have to re-establish, the kind of setup that we are seeing. It then means that this 3 waves to the upside was just a corrective structure. After all, it did not break this top. It was a corrective structure for what? For more downside. Okay, you have to wait until you have a massive push again. That massive push again will tell you that you are on your way to the upside by waiting for correction, and then entry to the upside. Okay, from here, half here to the upside. You can do it like this. All right, so we learn every day. When you make mistake, all right, when you analyze the pair and you see that what you are doing is based on the existing rules and guidelines, if you lose, you don't care, provided you maintain a low risk. But you have to learn from that mistake, learn from it. Okay, so the learning that we have learned from this is that right here, we're considering internal break of structure here. All right, we didn't consider external break of structure. Okay, you see that right here, this level is the last resistance. The market moved down. Okay, where's the next resistance? Here. So this level has not been validated. So effectively, right here, we are still in a downtrend. So the break of structure, that internal break of structure that we refer to right here, is the internal one, not the external one. This is the external one. This is the last resistance here. Okay, and if this is not taken, anything that still happens below it is still effectively, downtrend. You understand? So, and again, we didn't take note of the fact that this impulse that happened to the upside did not happen from the base. It was a 3-wave structure. All right, it was a 3-wave structure. So it's not every time you will refer a 3-wave structure to an impulse, in as much as that 3-wave structure did not break the previous, high to the upside. It's still a corrective structure. Do you get now? So these are some of the, salient, thing that we miss out while considering this analysis. And that was why we did not catch the whole of this move to the downside. We didn't catch it. The third trade that I got perfectly right was silver. I got silver perfectly right, perfectly right. Okay, so if you go to higher time frame, you see that we are still in a downtrend, but this look like a corrective structure, very strong correction. We want this to come to the upside before another, before it resume another leg lower. All right. Okay, so after seeing it that way, this impulse, the leg here, wanted to see like a retracement to 50 to 61.8. Right now, what I'm doing here is how I do top-down analysis. In daily, you can see it has finished its correction by getting to between 50 to 61.8. I go back to 4 hours time frame to see a reaction out of that level. Okay, so when this reaction happened, I did not participate in trading silver, because what if you get in here, the market move a little and then move to the downside? What will you do? So you will have lost the trade. So what we do, how I do it is, I want an impulse to originate, even if it's 4 hours time frame or the time frame you are using for your entry. Allow impulse to come out of that, level, because that is just a sign that correction is over at the level that you have marked. You can see the impulse. After the impulse, I now waited to see a correction back to 50 to 61.8. And can you see it right here? It came here. All right. And we had our entry to the upside. That was the process that we follow. But I was really angry over how market is not moving the way I want. You can't fight the market. If you are angry with the way the market is moving, you stop trading. You can't fight the market. What of the time it gave you, all the move, all the pips, and you make all the money? You were happy that time. So best thing is to stop trading. That was why I stopped trading. I actually had this trade in my signal channel. I had to tell them to take it off. I'm not interested. All right. I'm not, if it were to be good, I would have left it. But gold move faster than silver. So you can see the trade is going brilliantly well. If there's not going to be FOMC later today, I wouldn't have called it off. But because there's FOMC, I don't want to start looking at the chart because of one trade, and there's news. News is coming, and I start to look up and down just because of one trade. That was why I closed it, and now it's moving beautifully well. So that is the third process on this, and it has given 56 pips, 37 pips also. So that's just it, guys. So another pair I'm looking forward to is Euro GBP. Euro GBP, guys. If you look at this pair from a monthly time frame, you see our bias seems to have changed. Somebody said he's a day trader. Why are we looking at weekly? Why are we looking at monthly? Experience has shown that you have mistake in your directional bias at times, just because you did not look at what is happening in the higher time frame, like monthly. You have no business with monthly, no doubt, but the business you have with it is just to look at what is happening there. Just look at the candlestick pattern that happened last month and a month before. That's just enough. So all I'm interested here is that we are hitting this rejection zone at the support, and you have a lot of wicks here that show possible grab of liquidity. That's fine. And then after the market push up, okay, we have this massive push down, and we have this engulfing candlestick pattern. This information is enough for you in the monthly time frame to tell you that for the whole of next month, Euro GBP is going to be a buy. So from this point, I knew that in couple of weeks to come, Euro is going to be stronger than GBP, because if you have Euro GBP and Euro is going up, it means GBP will go down. And if you go and check Euro USD and GBP USD, you will see that Euro USD have been trying to correct to the upside, but GBP USD just kept going lower, little by little, little by little, little by little. Where do we know that this kind of thing is going to happen? from Euro GBP. Can you see? So we knew that this upside is going to happen. Okay. Then if you go to weekly time frame, you see what's happening there. After this corrective structure, which I forecasted, you have this move to the upside. So right now, if you look at this move in between here, you have indecision candle and you have this move to the upside. Most of the time, experience shows that the market might come to that indecision candle area. That was a weak area, and you see rejection there. Market will come and tap order from that level and make a move to the upside. Now you come to daily time frame. You see right from where I told you, market has already come to that level, pick order and move to the upside. So what I want to do right now is to take a fib of this move to the upside. It's an impulse. And what qualifies it to be an impulse, guys, because you can see that it has broken market structure. Okay, when a strong move break market structure, it's an impulse. Can you see the market structure, guys? You see all these areas, guys. It has taken it to the upside. So it's an impulse. So what I would like to do now is to find a corrective structure. Okay, find an area to which I expect this market to retrace to. This level will be fine. I also study the psychological level. Okay, this time around, I think I would like to pick 0.8700, this level. I would like to consider this level, this psychological level, because the next sub-psychological level will be 8650, which will be too far. You cannot imagine this pair coming to this level, even though we have our other block here. No, it will be too shallow a retracement. And if you look at the antecedent, it doesn't make a shallow retracement like that. Look at your retracement upside, retracement upside. You see retracement upside, retracement upside. So why would you expect this one to now come to break this low? If it's going to still make an upside, it shouldn't make so deep a retracement. And if it's not going to make an upside again, then this one will have come down sharp, meaning that it has picked enough order here for it to push down. But how is it pushing down now? It's not pushing down. So it's correction. So what we like to do is to wait, let the market get to this level, inside this level. Once you get there, you just move to 4 hours time frame. All right. What are you looking for in 4 hours time frame? You want to see how the market will shift. You want to shift. You want to see a shift in momentum from bearish to bullish market. Can you see? Before you can get involved, you want to see something like this. You want to see, you can see it's inside that zone now. Okay, it's inside that zone now. So you want to see a shift like this. If the market now come and break this structure now, there's already a shift. Okay, and it is that shift that will confirm that correction has actually ended at this level. Okay, and after that shift, you now take, a fib, all right, and let it retrace, and then you make a move to the upside. This is how you do it, and that is what I do, guys. That in most time, 3 days, I may not even see a single trade because I'm looking for confirmation. I won't see. The confirmation will not come. This one can come, make equal low here, begins to go up again. That's another 1 day of waiting. It will now be coming down, coming down, coming down. Another 1 day or 2 days of waiting. The week will go, but the account remains intact, just as the market behaved right here. When it was making this, the time it was coming up upside, it was wasting our time. It came downside, making equal low. We cannot enter here. It came this way and break this way. This was exact time the market came to our level. Okay, this was the exact time the market came to our level, because to take the fib of this impulse to this level, you will see that this is the level that you want it to correct to, and it came there. Okay, so after coming there, are you just supposed to just get in because it has come to your level? No. So what I do is I go back to smaller time frame and see how the structure broke. But unfortunately, I miss out this trade, and I was looking at it like this and I miss it out. Why did I miss it? Why did I miss it? All right. The setup did not develop well from the beginning. Okay. I was looking for a strong push to which I will get in after correction. But do you see what the market did? He didn't give us a clean configuration, a clean, presentation. Look at it. It was this supposed to be the entry, but I didn't see it that way. Look at it. So I was thinking it will still come down like this, break for me to enter, but it didn't do so. Look at it from here. The market make a move to the upside. And then another thing is that there was no way we could have gotten in for a buy here, because still look at the structure. Look at structure over here, guys. Okay, look at structure over here. So if you want to sell here, okay, if you want to sell here, you have been too wrong for you to do that, because look at it, the correction is almost near the bottom. So you can't sell here with reasonable profit. Can you see? So that is why we have to wait. The market came and broke this level. Okay, so we have to wait again. Where is our correction to get in? The correction did not come, guys. It keep on flying to the upside until this trade, the whole move here is missed. So it's better you miss it than that's 150 pips. It's better you miss it than getting in and having a trade that goes bad. Okay, it's better like that. Do you understand now? So now the next thing we are going to be doing for this pair is to wait. We have to wait to see this correction complete. Let it come down. It's going to be a good trade. I'm waiting for it. And of course, this pair has nothing to do with FOMC. Has nothing to do with FOMC. So we want this correction to keep going. We are not going to get in until you see break of internal structure. That confirms the end of correction. That's what confirms the end of correction. Then from here, you can take a move to the upside. Okay. Excuse me, please, just a minute, please. Okay, so sorry guys, so we have to monitor this particular pair together. Let's monitor it and see how we can benefit from this move to the upside. Just as I told you, if you do not see, if you don't see evidence that the move to the upside has started, there is no point for you to get in. This is the level I targeted, and I want it to come to that level. You see, let it come until it breaks structure. You let it come back, then you get it. That is a Euro GBP. Then another pair that I'm targeting right now is BTC, but it has gone anyway. I saw it. I didn't want to trade because of FOMC. Didn't want to trade because of FOMC is coming. I don't CPI, FOMC, non-farm payroll. I don't trade them. Okay, I don't trade them. Don't mess up with my capital. After all, when the news is over, you still have opportunity to trade. So why messing around? Okay, BTC is still going to go down, guys. Still going to go down. Okay, after this move, you have this correction. If you have this on a monthly time frame, you are still going down. Okay, I guess we are going to hit around 10,000 for BTC. I'm going to hit around 10,000 based on weekly. Then you have this time frame, daily time frame. Initially, I was projecting this to be, a diagonal, a leading diagonal, with this as a corrective structure for me to make a move to the upside. But if this is a corrective structure and this is a diagonal, then I should have a corrective structure here and have a move to the upside. But instead of a corrective structure here, what do I have? I have a move down, and the market is giving me this ending structure. So what I'm projecting that will likely happen for what do you call it, for BTC, is that, you see what I told you the other time, After you see consolidation, market push up, push down, and push up immediately. That shows that this is a grab of liquidity, and you see equal low here that is, the liquidity is taken, and the market swept to the upside immediately. Okay, once it happens that way, guys, this is a known pattern. I tell you, just take a fib of that impulse, target your 50 to 61.8. That's your entry. I ignore this trade. This is your entry. And then when market gets to this place, this level, if you want a precise entry, guys, so what you do is that at that level, this is a much higher time frame, 4 hours, go back to 30 minutes, and you see a break of structure. Okay, you see break of structure. You see right here, low, lower high, lower low, lower high, higher low. Can you see, guys? Higher low. That is a sign that you are moving to the upside, because you are not making a lower low, you are rather making a higher low. So from here, you have this 3-wave corrective structure. This will have been our trade to the upside, but I ignore it because I'm not comfortable with market movement right now. This is our trade on BTC to the upside, stop loss below, and then target the high, at least minimum this level, this high here, minimum minus 0.27. That's my magical profit taking level for my fib. Okay, at least you should expect it this way. And of course, you can see that silver and gold, they are also going up, meaning that commodity are going up against the dollar. We don't know why, but that's how we see it technically. Okay, so this will have been our trade based on this setup, but I am not in it. Okay, but I'm still in silver. In my signal channel, we have closed silver, but on a personal account that I can afford to risk more, I left it open and it's running fine. Okay, so let's look at CHF JPY mark pair. CHF JPY. We have looked at it from the beginning, but we didn't look at it from monthly time frame. You see, all JPYs are bullish. No doubt, all JPYs are bullish, but I can tell you confidently that very soon they will break down. Very soon they are going to break down. The reason why they are going to break down is because the Japanese central bank are no longer comfortable with the weakness in yen right now. They are no longer comfortable with the weakness in yen. You know, what people think is that people that are outside Japan, they are always thinking that Japanese economy is export based. You know, they are export oriented economy. This is actually a fallacy. It's not true. Japan produce what they consume. All right, Japan produce what they consume, but their export, all right, they have their plants, their Toyota plant, Suzuki plant, Yamaha, Nissan, all these plants, they have it outside Japan. So they go outside Japan to go and produce. And when they produce outside Japan, they don't need to import it to Japan. They just export it from those countries. Okay, but the Toyota they will use in Japan there, the Honda they will use in Japan there, they produce it within Japan. That is what they do. So somebody will say, the electronics of this world, go to China, you see their plant. Go to US, go to Germany, Europe. That's what they do. They will have a plant in every continent, everywhere, but they are not producing all this in their country. So supposing they are producing all this in their country, then you will say that they are export-oriented economy. Although they are more, they have a good balance of trade anyway. So there is no need to make their currency excessively weaker compared to other countries. Right now in Japan, consumers are crying. They are weeping. They are weeping. They don't like the situation again. When they want to import anything is a trouble for them. You want to import a little thing, you see plenty yen that you are going to use. And it's not easy to make the yen over there. So their local economy, their local investors are no longer comfortable with that idea. Do you understand now? So now the Japanese central bank, Bank of Japan, is looking for a way to increase the strength of what? Of yen. And the strategy they want to adopt is by selling the reserve, the USD reserve at their disposal. That's what they want to do. They sell dollar to people, and take their yen. The yen is excess in their hand right now. So they sell the dollar and take yen. So by the time they do that, yen become strengthening a little. So and by the time yen is strengthening, what happened to all the yen pair? All of them will fall. Okay, that's why you are seeing all this elongated rally to the upside will fall. Okay, and the way yen fall is always very massive, very, very massive. If it's about to fall. If it's rallying, to be going up little by little, little by little, little by little. But if it wants to fall, guys, it falls crazily. So just have that at the back of your mind, guys. So, but monthly on this pair is still bullish, weekly still bullish, all right, daily still bullish, but you can see some reactions at this level. So when you see reactions at this level, and before then you do not see any bearish market before then. So what it tells you is that there is possibility for bigger corrective structure, either reversal or possibility for bigger corrective structure to the downside. That is an evidence. So what you just do is simple. All right, what you just do is simple. Right here, we are seeing this. All right, on a daily time frame, look at what we see here. This is a very good candlestick pattern that indicates possible move to the downside. And you see the little correction and a push more. So what I want us to do in this scenario is to take a fib, that you take a fib and check what's happening at 61.8, which is right here. If you don't want to take a fib, maybe it's wasting your time, I have a way of doing it. I look at this move to the downside, I look at the middle. When I look at the middle, I look at the psychological or sub-psychological level at that middle. Look at it here. Boom. Can you see? So I have not taken a fee, but I have gotten what I needed. That's another way of doing it. Okay. So those psychological and sub-psychological level, they are important support and resistance level in the market that you must not joke with. You go to the bank, they don't place trade randomly. Okay. They have their trade, set at those levels. That's why they are very important. So what we are going to be doing is to monitor what happens here in lower time frame, like intraday time frame, like 4 hours. We want to look at 4 hours. Of course, in 4 hours time frame, we are beginning to even see rejection. We are beginning to see rejection, but nevertheless, I want to see an impulse here. I want to see an impulse here to appear here. That impulse, you don't necessarily need to get involved at the top if you don't have this key, to know exactly where to get involved. But you can wait to see an impulse first. After that impulse, you now let corrective structure develop back to right fib level. You now take this to the downside. Okay. So as I was discussing with one of us from the beginning, if this is a corrective structure, then expect this to continue to go to the upside. And in that case, this move will not happen. So once this move is not happening, we cannot be looking for correction to sell. It's not possible. Okay. And at the same time, if this is the originating impulse and you are having A, B, and C here, then you know that in 15 minutes time frame, you will see an impulse here that confirm that this correction is over here. Then you see an impulse corrective structure downside. Okay, that's how I see CHF JPY. I don't know if anybody has any pair in mind that we need to take a look at. Just type it down and let's take a look at it. Okay, let's take a look at it. So Is there any pair that anybody wants us to take a look at? You can quickly take a look at it. Okay, yes, I have this setup on Euro AUD. Okay, I'm just monitoring it. Okay, let's remove this first. Okay, Euro AUD. I'm monitoring it at this price level, guys. At this price level. If the market gets to this price level and bounce, if it bounces, all right, let's say in 30 minutes time frame, you see how it's developing. If we have something like this, guys, if we're having something like this, okay, if we have like ending structure here and it bounce, if it bounce to the upside here, okay, we will not hesitate to look for corrective structure back to the average point and we'll buy. Okay, I'm also taking a look at that market. I want to see the structure that is going to give us. Okay, but if you continue to fall down like this, then we have no trade. Okay, you can see why the more mature you are, the harder it is for you to get set up. It becomes very hard for you to get set up. You see, so if you keep falling like this, then we have no setup. But if the falling is halted and we can see our structure and we even see a break of internal structure and we can get entry, yes, we can buy, we can take a buy to the upside. This is the next level around 51.50, 51 between 51 to 51.50. That's the next level to which I expect it to get to. That's the supply, okay, before any move to the downside. Okay, some people have sent message for, yes, Audi card, and can you analyze USD JPY? Sure, let's just look at those two before we call it a day. AUD card. I traded the buy yesterday for a few pips. I existed, can you see? I traded it, it was too slow. I left it because it's too slow. Okay, you see, there's something that you guys must understand, and let me tell you today. All right, this is basically what I discuss even in my mentorship class. All right, even in my YouTube channel, you don't see me discussing liquidity and all those things there, but it's a trick that I use in my setup a lot. Do you notice what happened here? You notice what happened here, right here? You see what happened here? You see how the market came, took up all this. This is what is called liquidity. Took it up, down. Can you see? The same thing is developing right here. Okay? You see, the market is creating this level, guys. It's creating this level. It will come, take up the level. It will even take it to this level right here and down again. So the sell setup in AUD card is better than the buy setup. The buy setup is going to be very slow. Okay, why do I say it's going to be very slow? Look at this move, this three-wave move to the upside. Look at the level it's rejected from, 78. Why is this 78, guys? Why is this 78? It's rejecting at 78 because the corrective structure that comes to that fifth level is zigzag. Can you see? Zigzag. This zigzag corrective structure. And we know in this group that any zigzag corrective structure usually comes to 78% retracement. Okay? So when on daily we have come to the right fifth level, what we just need to do is to go to 4 hours and see how the market has changed in terms of its character. Okay? All right. So you have this market change, internal structure change. Okay. I'll tell you why I left the market yesterday. When the internal structure change, you have this. Okay. Ordinarily, this is where you are supposed to go in for a buy. Okay. This is where you are supposed to go in for a buy. But look at the way the market came down. It came down forcefully. It came down with a powerful impulse. That is why you see this move to the upside is moving slowly. because these sellers, some of them are still there. If it has come down correctively, then it will have made a big impulse to the upside. All right. So, but I now capitalize on this move right here. Since I refuse to catch it from here because of this move, I had to wait to see how there will be change in character. Can you see? Character has changed. The market that was bearish is now bullish. Okay, can you see? Top taking correction back to medium point and then make a move to the upside. Can you see? So now, right now, this will have been the best time to even get in, but we can't get in here because look at this candle. It's too big, you know, it's too impulsive. So this might give you something like this again. If it doesn't break this low, then you wait again, break of internal structure, getting for the upside. Okay, getting for the upside. That's how it works. So why I left the trade is because I knew it was going to be very slow. Why? Because this was massive. This was too massive for me. So anything you are going to produce here is going to look like correction of this impulse. And I needed a move to the upside. So what are we going to expect? In most cases, what normally happens is that once the market is going slowly like this, at a time, it's going to break in 3 waves like this. It is these 3 waves that will give it enough momentum and impetus to now make a bullish and powerful move to the upside. Okay, maybe that's the one that we're going to get involved in. And in that case, this structure is going to be like you have an impulse, you have 1, 2, and 3 corrective structure here and a push to the upside. Can you see? It will now be a structure like this. Okay, and in that case, this is a corrective structure for this move. And see how this move break the structure here. Can you see? Broke the structure, corrected back to the right fib level, which is 50 to 61.8 right here. And then what are you supposed to do? You wait to see an impulsive move out of that level. Did you see the impulse? Yes. Why do we call this an impulse? It broke the structure. Okay, you want a correction to 60 to 51.8? Yes, it came, but it came too impulsively. You can't take it. That's why you're having this correction. You still have this leg. So you have impulse here, correction here. And the 3 will be a 3-wave corrective structure in A, B, and C. And then you have this move to the upside. This is the move that will likely go break the top that we're referring to. All right. And then another way you can project your TP for this buy here is by looking for fib extension, put it here, drop it back, and you look for 100 to 123% fib extension, usually this area. That's your take profit area. Last but not the least, guys, USD JPY. Do not trade USD JPY now because we're expecting news on dollar later tonight. All right. So since Monday, I've seen this setup and I've suggested that this is a build of liquidity right at the bottom and at the top. So one will be taken. And I said it in my weekly outlook. I think I said it that if the liquidity at the top is the one that is taken before FOMC, then it's likely that the market will take order from supply right here and make a powerful move to the downside. That was what I said in my weekly outlook. I also said that if this liquidity to the bottom is the one that is taken right here, it means that it's likely that if it happens before FOMC, it then means that the market will make a move to the upside. That's what will happen. But as it is now, the market is going to make a move to the downside, most likely. But let's wait. You know, market is not, you are not supposed to be too speculative in this market. You know, your forecast must be for just academic purpose. You need to just react more than you forecast. You react with to what market is telling you. So you don't take action first before market will act. If you take action before market act, you'll be in trouble. But it's better for you to allow market to act, then you react to whatever the market is doing. That's the only way you can be profitable in this business. So that's it, guys. I think we have spent much time. That's it, guys. I will see you this time by next week by the grace of God. So thank you, everybody. God bless you.